Hi, it's Pete Birchler of StockMarketAlchemy.com, and it is Sunday, February 3rd. I'm going to give a brief update of the stock indexes here. This first chart is QQQ, so the NASDAQ 100 ETF, and this is a weekly chart with a stochastic study underneath it. As I've noted in posts over the last month or so, this is possibly setting up as a head and shoulders topping pattern on the NASDAQ. The other indexes have obviously been very, very bullish, moving higher, and they are at new bull market highs across the board. However, QQQ, the NASDAQ 100, is below its September high, still here by roughly 5%. So could be significant. And we see the stochastics now is overbought on QQQ, and that's happening at a lower high currently, and the move up from the November low, if we use the cycle tool here, we can see that it has taken more time from the bottom to the recent high than the decline took. So from a price logic standpoint, we can see that this move down was stronger than the move up, and at trend change points, that will often be the case, is that we'll begin to see the downside moves become stronger, and then the upside moves be more consolidation type of moves, as opposed to very vertical or fast retracements of the correction. So this is a setup to continue watching here. If there is a downside break of the pattern, the head and shoulders minimum projection would project down to roughly 53.60 on QQQ, though that would also likely confirm a bear market in stocks, and we would likely see prices move significantly lower than that if that is the case. Now, one interesting fact here is, and I think may be indicative of the market sentiment right now, this is a chart from sentimenttrader.com. An outstanding site if you like to look at sentiment or contrarian related data. It's a very affordable and excellent service. So if you have any interest in there, go to sentimenttrader.com and check them out. I don't receive anything from them if you go to there, but it's a site I've used for years off and on, and they just have a lot of good information. So this chart is from their site, and this is showing the Holbert NASDAQ sentiment. So from MarketWatch.com, they basically monitor newsletters for their recommendation long or short on the NASDAQ and on the stock indexes. This chart is specific for their recommended exposure on the NASDAQ. The zero line here would indicate basically no long or no short position, essentially a flat position. When the line is very high, that would indicate a heavy long exposure, and when the line is very low here and these numbers are negative, that would mean that the newsletter writers are recommending a net short exposure in the NASDAQ. And what is interesting here is that in the current time period, it is registering a multi-year high in the recommended long exposure on the NASDAQ. And what is interesting about that is that prices are at a lower high than the previous peak here, and this index is lagging all of the other indexes, and Apple, the biggest component of the NASDAQ 100, has obviously made a severe correction, indicative that that might be the beginning of a bear market in Apple's share price, and yet we see the recommended long exposure very, very high, to some extent almost wildly bullish given the circumstances. So that may be, from a contrary perspective, an indication of the appropriate sentiment for the final peak of a topping pattern like a head and shoulders, is that we see there is indeed significant optimism towards the NASDAQ here at this right shoulder. So that doesn't mean we necessarily short right here, though that certainly would be a viable play, would be to short with a stop above this high. Above the head of the pattern, given the sentiment here. But my preferred strategy would be, if one is looking to actually short one of these indexes as opposed to specific stocks, would be to wait for the technical sell signal to come. So wait for the stochastics to cross into a sell signal, wait for the weekly MACD to cross into a sell signal, something to that effect. So you could take technical sell signals if they come, rather than shorting without any type of confirmation that a new downward trend may be getting there. So that's my take on the NASDAQ. If you want to get some more information on that, you could search through my previous post here. The volume is obviously also very, very light on the NASDAQ here, which is typical of a right shoulder of a head and shoulders pattern. And that would be another factor that suggests that this may be a valid head and shoulders topping pattern, in addition to the NASDAQ not confirming new highs in the other indexes. As far as some of the other indexes, I briefly want to show a pattern that's at play here in some of these stock indexes, both here in the U.S. and abroad. I'm going to show this on first on the EWA ETF, which is Australia ETF. And it is just very, very clear on this pattern, so you can understand what I'm saying here. But at times, from a cycle or time or pattern analysis, there is what's called a low to low to high time projection, or it may be called an alternate time projection. And what we're looking at here is a very significant low in, let me move to a 3-day chart so we can see here. So this is the October 2011 low. And what we saw here is a move up and then a move back down into this June low, so a major correction into this June low. And if we take that amount of time from October to June and we project that forward, that would give us a projection for the next significant high of the pattern. So you're basically looking at something like an A, B, C pattern, where the C wave equals the time of the A plus B pattern. That's a relatively standard relationship. That time frame was reached at the end of this week here. So we have this low to high time projection here. And that is occurring with, if you look at the MACD here, let me spread this out, even as prices have moved higher here over the last several weeks compared to the December highs, we see that there is this divergence with a lower high in the MACD on the daily chart. So that is what you would want to see at the completion of a pattern. If this is to be a high, is we should expect to see some divergence or weakening of the pattern. Now there is no crossing down yet, so we could wait for some type of cross in the technical signal or a momentum cross of the zero line to indicate that the power has shifted to the downside there. But that is the significant time projection at play here. Now, what I want to do is also show a similar projection in the XLB ETF, because I had made a post about this in December or January, suggesting that there is possibly an upwards ABC pattern that began at the September, basically the beginning of September, and this is the material sector ETF here. And I suggested that we may be seeing an A, B, C type of pattern that could possibly complete at a lower high here. Then we saw that that didn't happen. We got this news on the fiscal cliff, resolution, so to speak here, and prices have moved higher since then. The maximum expected time that I would expect a pattern like this to take would be for this C portion of the move to equal the time of this A plus B portion. So based off of this smaller pattern here, we can also look at this as a low to high projection. And that also completed on the same day that this larger October 2011 to June 2012 low to high projection completes. So we have two overlapping time cycle projections here that projected to the end of this past trading week. And we also do have some divergences showing up in indicators and in breadths and that type of things to indicate that it is possible that we are seeing the completion of this pattern here. Now, any move to higher highs on this beyond the next day or so would significantly call into question my mind the validity of this pattern, but it is interesting that those two time cycle projections are basically lining up exactly on the same day. So if we do see some market weakness, then that may still be a pattern that is in play and would project significant weakness to come in the stock in all likelihood. As far as the S&P 500 goes, this is a chart of the S&P 500, a daily chart with a directional index indicator down here. And after a long basing period, price broke out to the upside, indicating a new trend, and that registered in mid-January. The ADX is now around 35. Typically, the upper range of the ADX is roughly 40, and you can see in some of these prior times here that as the trend was unfolding, it began to weaken after the ADX got up to 40, and we essentially saw that last year around this time of year in February, that the ADX poked above 40, and then we saw shortly thereafter a larger correction here than we had seen in this tight trending period for the last couple months. And things started to get more choppy here as that leg up topped out and we experienced this correction. So I believe that's what we'll begin to see here soon in the S&P 500, is we'll probably see things get more choppy relatively soon, even though we may expect some higher price highs. Given the typical technical situation, I think we will begin to see this become choppier relatively soon. On a weekly time frame, if we move out to the S&P 500 here, this is a weekly chart of the S&P 500, and this is showing, this is a monthly chart here. Let's move into a weekly chart and get a little more space on our chart here. Now, these indicators down here show that there is a divergence on the MACD indicator. However, the MACD looks to be breaking that slight downtrend in the divergence here. So we may see this continue higher for a period of time based off of historically normal legs up in a bull market. This red box would be the area where I would expect possibly those legs up to complete. A typical leg up is roughly 25% gain in roughly 5 months in stocks, and that would put the price up above 1600 into the spring of this coming year here, or of this year here. So that would actually put the S&P 500 at a new all-time high above the 1575-ish level, where it peaked in 2007. So that would not be unexpected given the scenario here. However, there are a number of sentiment indicators that are showing some relatively strong divergence, in that there is not the type of optimism that we typically see on breaks to new highs. If you look at put-call ratios and some other measures like that, we just aren't seeing the typical type of setup in those data that we see at prior breaks to new highs that lead to trending moves higher. So I do have some concern that this might be somewhat of a non-typical topping area here, but in any case, what we would want to do is we would want to wait and actually see some type of confirmation that price is turning down here before betting against this larger uptrend in stocks. So that pretty much covers what I wanted to go over for this update here. Price is obviously uptrending, but starting to see some significant divergences in breadth and sentiment, and sentiment is significantly overdone by several measures. So we will probably in a typical scenario, we will probably continue to see some higher price highs over several weeks, even for a couple months. However, we will start to see some cracks develop. We'll see some stocks weaken. We'll see breadth start to weaken, and we'll start to see more divergences showing up on some various time frames here. So that's all for this update. Have a great weekend.